Good afternoon, good evening, everyone. Today is Tuesday, September 24th, 2024. Our goal here is to review the market generated information in a holistic fashion. We're following the auctions narrative of both ES and NQ. If we have time, we'll theorize and add additional commentary towards the end. We did speculate in the market today. Please see our uploaded recording. It contains some of my real time analysis. I use it as a tool for my professional development. Okay, perfect. Let's get started. So we'll start off with our typical process. Where's the market coming from? And then what's the narrative of the price action and the expectations? What exactly is the market trying to accomplish? So, looking at the typical process of where we coming from, we have our bulls in full control. Same thing as always. We have our, that's not right. We have our, oh, that's right. We had our bears that were trying to thwart some pressure, but the buyers were able to push legs above. So some nice legs for sure. We are coming above this 2 week balance range that we were dealing with from the longest. We had our look below and fell, and we have in our continuation to the upside. As of right now, there has been little reversion. Any reversion is quickly thwarted and reversed back to the upside. So that's where we're coming from. The goal for the Bulls, as they're in control, was to ideally shoot for the all-time highs, which is let's call it the 98. I think it's like 98 half. Let's just call it 99. Well, actually, let's just say 5,800. They really want to be able to get to 5,800, ideally. Continue to one-time frame higher highs and higher lows. Looks like they were able to do that, but we'll need a little more context and see what happened on the intraday. Same situation here for the NQ. We won't belabor it. They were able to push above slightly above this 20K 200 and somewhat find their way a little bit short of this impulse candle here to the low from August 22nd. So about 40, let's call it 50 points away, but definitely a solid attempt. We're officially out of the inside bar from that Thursday, which was the day after FOMC. The S&P 500 is still inside of their inside bar. So, although this is somewhat bullish, or incredibly bullish rather, that we're continuing higher highs and higher lows, the S&P 500 really wanted to get out of that impulse candle day. But we won't belabor that too much. Looking at the NQ, a bit of a short range today. Another 262, still more than Friday and Monday, but still relatively low. But 262 isn't bad, especially when a lot of price was done more to the downside and completely rejected, and we were able to close higher and actually make a higher high. So again, solid day for the buyers from a quick look. Really not too much to say here. Very much of a not necessarily a P. It's really just a high normal. P would be more of that shape. This shape is more pretty much like that. So, we'll just call that just a high normal of what we're looking at there. So there's just no kind of activity to the sell side when the opportunity presented itself. Sellers didn't want to really push it, and we can see that from the delta as well. The minimum that we got was 1662. That's actually where we closed. So you would ask yourself who's selling, who's buying. I would imagine a lot of those sellers that we saw in this here was probably bulls taking profit and possibly new money shorts that just trying to continue to shorten a rally, to be honest, which is partially me as well for some of the day. Same situation here for the ES, except the sellers were able to get to about the minimum of 6K, which isn't too much. But the little control that they did have completely was reversed, and the Bulls were able to step it back up and really push and stay aggressive. We ran into a wall here at these mid 80s. They pushed it above, sellers tried to push it back down, and they were still able to hold these high 90s, close to the high 80s, close to the 90s. So again, very decent, very good job looking at the buyers from this standpoint. So looking at what we had for the on the docket today, really not too much for the earnings. Tomorrow we do have the Micron, which we'll look at, after hours. For the data today, we did have the consumer confidence and the Schiller Home Price Index. So again, really not too much. We did have an SOC candle here, which I failed to draw in real time. I didn't think about that. Oh, good Lord. But we did have this today, so unfortunately I overlooked that. So we'll see the response. It may not be uber important, but it's the reaction that matters. We understand what the daily candles look like from the footprint and just the daily candles. We finish about 1/4% to the upside, with the leaders being industrial and discretionaries for the more heavy hitters, followed by the communications. Materials, they showed out today, and it's always good when technology can close well. Even had some assistance from industrials. Our big 2 and 3 hitters for the financials and the healthcare, they're really taking a break right now. Even consumer staples didn't get too much love today. But very nice to see the technology sector really hold things down. With the rebalancing that happened recently, I would imagine this 4% would have been a lot more aggressive for technology. But notice that they're not weighted, 20-ish%. You can check my past videos to see what they're weighed, but I'm pretty sure this changed. Just that was a rebalancing part of quadruple witching from last week. But I digress. Again, solid showing from the discretionary as well. It's always good when you can have your 1-2 punch being technology and consumer discretionary. They don't both have to go over 1%, but as long as they're both, close to a percent, they're doing pretty well. They can take some pressure off finances and healthcare, and all these other sectors. Just to be honest, so solid day overall from what we can see, but we are a little worried about the finances. Looking at the 5 day, finances and healthcare are still red. Looking at the month, that's not the case. But just something to be on the lookout for. Just something to be on the lookout for. Just saying. If we have some issues with technology, which doesn't appear to be the case, that may slow the S&P 500 down. But I think it is important to mention that technology led us down here, so they had a lot of relief. So they definitely have room to the upside. But again, that's a little more speculation. That's not what we're doing here. So speaking of the technology, we'll look at the NQ. Again, not really too much to look at here, just a high shape, a high normal, possibly like a P-shaped day, short liquidation day. They were getting close to the 20K 200s. They were able to pierce through, but not make too much progress into that zone, but pierced it nonetheless, and they actually closed in it. And now we're starting to like leak a little lower in the overnight. But again, this is not about the overnight. So this is just a massive area for the NQ to haul over, and they really need to close above the 300s, which is completely out of this zone and going to be above this high volume node. They want to kind of pull back and use this as support to continue up. That's just one hell of a fight right now when they were already really stretched out to get back up to this place in the first place. So no singles, nothing like today, nothing like that today. Very controlled upside day, um, but definitely a short liquidation day for sure. Short cover and rally. Same P-shaped profile here. No singles, volume point of control near the highs. So solid day for both. Again, not really too much. Anything else we can see from the dailies, from the 3 minute candles. And again, we do want to take note that we did retest that FOMC zone again, and then we had a beautiful bounce that propelled us through the HOD and allowed us to close near the highs for today, or at the highs rather. Okay, perfect. We have our intraday. Looking at the footprint. Actually, before we get to the footprint, we were just looking at the market profile. So again, we're going to look at the same situation here, but just on 138-minute candles. Again, we have this balance zone that we're kind of balancing up here. We had our 2 week balance range there, but we are completely past that. Again, 2 week balance range, and now we're bouncing off that as support and really just channeling up here. So solid job from the buyers overall. They really just want to build volume higher, and they'll be doing quite well as they are. Same situation here for the NQ, except they're climbing up this big sell wall. Once they broke that little trend line there, we're able to break through, use it as support, and we really haven't looked back since. Even when we had our FOMC, we only retested it once and have not been back since that Wednesday. And yeah, we're just kind of just pushing. So again, solid job from the buyers on the NQ as well. Nice recovery from the big downslope that they had. Looking at the intraday, we'll look back at the NQ and we can see our, let's get our context again. You know how we do. We have our Sunday. Oops. Sorry, I'm using my keyboard. Wait, how did I do that? What was it? Control? Ah, control. I see. Interesting. Okay, cool. So, okay, that'll help out a lot. So we have our Friday, and then we have our overnight session on Monday, right? Let me double check. So yeah, that's Sunday. Just make sure I'm not lying to you guys. So we have our Sunday where we had our drift up and then our bit of a sell off, which did not break the pivot, and we basically just chopped sideways, built a lot of volume to the side, and we drifted up a little bit from last night, and we found support in that same damn range, um, that we were talking about. I'm sorry, I'm just really yeah, that's the area where we pull back to that midpoint, and we tried to make another leg higher and failed and sold off into the RTH. But where exactly did we sell off to? This same pivot that we were just looking at here, which is just really goes back here, which is nowhere near um, that 20th, which is a Friday. So did they pierce? I think that actually may be a double. That's actually a double. I think it may have pierced it by like a point. Trying to double check. Yeah, it pierced it by like a tick. That's amazing. That's amazing. So yeah, they ended up ticking through that maybe about like a point or so. And yeah, that's just a bit of a high level overview. But again, so just looking at the overnight, they tested the prior balance IB low, they shot above, they broke above and traded the highs from the prior day, all in the overnight session. Immediately sold back off into the mid. So it's a possibility for like a balance day. Tried to head back up and make a new high into the RTH session, and we rejected and completely reversed lower. Okay, so if we're reversing lower, where are we going? Because there is no trading into this upside at all. Okay, so we're slanting down, and then we have our SOC candle and completely sell off through the prior IB low. And we're pushing and we're pushing and we're pushing, and we ended up finally breaking the prior day's low for it's really the overnight low, but you know it's still yesterday's low. It's Sunday's the Sunday low, but it's really Monday's low. So again, you can see buyers tried to put up a fight once we got near the overnight low. It gave up. We ended up breaking that low. Again, we just kind of fighting here and there. We ended up breaking that low there, and then immediately reclaimed the 5S, the 5 smoothing average, and then it was really all she wrote. No closes above for almost 2 hours. And the first one that was closed above, it was engulfed 2 candles later. And then they just sat sideways and used the open as support for the remainder of the day. So again, fairly simple. We'll look at the trade of the day shortly, but this was a little. Now that I look at it in hindsight on the NQ, it's much more clearer. But this is a little more simple for the S&P 500. We're not going to go through the whole same process with explaining the price action recently, but I do want to give a look at the FOMC high zone here. So same situation, except um, The ES has been a little weaker, and I'm assuming that's because of the tech and the healthcare. You can see our tests within the SOC zone has been a few tests. So as we are in the same situation from the overnight, we shoot above, and then we test the midpoint, and then we try to make another leg. Same thing as the NQ. Our point of reference, because again, I was looking at the S&P 500 primarily. I was looking at same situation, open drive lower, and then we had our SOC candle push lower. We ended up ticking this FOMC high and immediately tried to reclaim this 5S and failed. As it failed, we came all the way back down to the FOMC candle, and we're not trying to trade below there. We closed and went down again. We're not trading in the FOMC zone. We tried going down once more with this candle and completely reclaim this five smoothing average on a 3 minute candle. So again, in hindsight, looking at this, it's a lot more cleaner. I was able to piece some of this up in real time, but in hindsight, it's always 2020. But there was no fucking trading in this FOMC zone. This is considered cheap. If you can get these prices, good luck. Because anytime we touch these prices, that shit starts flying, and we make a new leg or a new high. So as of now, this is considered cheap. These 57, 56s. And again, that's all she wrote. But again, it wasn't as aggressive as it was with the NQ. NQ is just, is sectioned a little differently. And again, we are seeing some weakness within the healthcare and then the finance sector. So yeah, really for the end of the day, I mean that's pretty much it. They ended up testing the midpoint as double VWAP, close at the IB mid, and just close near the highs to finish the day. Fairly simple. Looking at the actual trade of the day, this is the one that we actually took. Again, you guys have been hearing us talk about this FOMC pretty much every day. We essentially just didn't want to touch. I mean, you had your chance here. If you're a little quicker on your take profit, cool here. And then you had your another attempt there. You had your another attempt here. So on the 1 minute, you can see that this 5 smoothing average was taking a little quicker. You can wait a little bit. There was no kind of pullbacks. You really just have to kind of get in your risk. Our risk will end up being, what is this? So I mean, even if you get in here sloppy at 57.61 with a stop below, let's just call it 54 just to be safe. 3 ticks below the low. I mean that's 7 points right there. You targeting if it's 75 for the 2 to 1, that's past the initial balance, and then that's returning to this IB low. We've been seeing that every day. So I mean that's not anything that's far-fetched by any means. Ideally, we would be targeting the high, given the context of the situation, especially since we're near the all-time highs. Also, there was a few attempts for some breakouts, here a little later in the session, for sure. The here was a little bit tough to see in real time, especially given the context of where we were. At most, you had this pivot, which was pretty important from the overnight session. So I mean, I can see how you could put your stop at the low prior to that SOC candle. And imagine if you do break this low, you may have some kind of continuation, but you couldn't expect, what was this? This was from 72 to, so you can expect 9 points. 9 points. All that was in one candle, by the way. It just ended up, yeah. Oh, I forgot. Yeah, this is in 1 minute. So yeah, they ended up trying to fight back, but they closed near the low essentially. But yeah, if you were to take this breakout, you would have to target this SOC high. But just given the context, and if we would continue, given the open drive to break through, I couldn't really see it. So I mean, I did try to play that in real time, but in hindsight, it kind of is what it is. But this is a little tough to see in hindsight, but in real time, this kind of makes sense. So I need to do a better job of being able to kind of spot that out. On the NQ, they had a few trades themselves. Um, I believe basically this is the same situation. The fact that we broke that overnight low and immediately reclaimed, that was an automatic buy right there. Even if you do get in sloppy, 2 minute, two candles later, 2 minutes, At the 88s, your stop here would be the 53. So I mean that's 25 points. So I mean 25 points. So I mean if you had to do, just a 2 to 1 just to see where that would be, that'll get you above this fucking pivot here. So by default, that just makes sense. So again, this is just something that we need to do. Just pay better attention to. Um, yeah, just really pay better attention to. So um, just understanding of where we are. So really, I mean, that's it. I kind of feel like I kind of flew through that a little quicker. Um, Solid job for the buyers, of course, especially with defending their areas. The buyers have done it again. This is a bull market. They're going to be incredibly resilient, and the market looks like that it's gunning for those all-time highs, and anything that gets it away from there is going to get abused and ran over. So it's best to stay with the momentum and try not to fight it, because if you do, you will lose that battle. The market is always right.